Everybody, welcome to TraderMerlin Show for your Monday afternoon edition. It is the 17th of April today, and more bank stocks, as you probably saw from my little introductory graphic there. Banks steal the show. Well, at least 2 out of the 3 big banks that reported today stole the show. One of them got smoked, and I actually had a completely different graphic I was going to use for today, but I thought, no reason to be all gloomy about it. Let me see if I can show that one to you. Let's get that over here. Actually, I kind of really like the graphic that I made for today, but it just wasn't quite appropriate just because there wasn't like a bloodbath in bank stocks today. So where did I put it? Let's go over here in my images folder. 1 second, I prop this bad boy up for you. So I was going to focus on State Street today because State Street was one of the worst performers out there. They missed earnings and took a pretty big dive. So I tried to create a picture of a banker that looked all serious and somewhat depressed. Unfortunately, I can't seem to find that graphic for you. So we'll just have to do it without no State Street banker collapse, looking bad, depressed. I don't know where you put him. All right, anyway, welcome to our show for Monday. Let's dive right into the overall markets. I'm going to switch things up because I don't have a specific topic, so to speak, just really talking about banks today. So I'm going to go through our top 7, and then we'll go back and look through the banks, how they reported some of the economic data, and then set you up for tomorrow, which should be an even bigger day because you have your first official popcorn trade of this earnings season, which I am pretty damn excited about. All right, let's go to your top 7. I'm going to start from the bottom, work our way to the top here. In 7th place, Bitcoin took a pretty big dive over the last 24 hours. You can see here, down 3.18%. You know, the big question will be, do these levels hold? So I'll draw the line right at the kind of the breakout point, which is right around 29,000. So we're at 29.5 right now on Bitcoin. Typically, as you guys know, the markets are comprised of impulse and corrective phases. So as we see this last breakout above 29,000, rocking all the way up to 31,000, okay, that's fine. I guess that's just normal price action. And the question is, how severe will this retracement be? If this is in fact a strong trend, it's going to continue in its direction up, then it shouldn't close below 29,000. So we'll wait and see what happens over the next couple days if it manages to drop below that or hold it. And then if it does, then the good news is we'll probably see it rally back up above over that 31,000 mark. And from the big picture here, you can see I've got that 31,000 mapped out. There's a little bit of an extra, maybe around 32.5. And after that, you've got some unfilled gaps that need to be filled. Now, of course, this is on the Bitcoin futures chart. You guys know you do not see gaps typically on a Bitcoin chart because it's 24 hours, 365. And the reason this chart is showing a gap is because it's a futures product which is closed over the weekend. So let me show you the Bitcoin price itself. Let's go, where's my BTC? Of course, I don't have them in alphabetical order right now because I'm doing off of biggest gainers. There's Bitcoin. And as you can see, that gap that I was referencing was somewhere back over here, right around 36,000 on the futures chart, but there is no gap on this one. So we'll have to wait and see what happens if it can get above this upper yellow supply zone that I have drawn on this chart. I do think it will happen. And if you look here, the picture looks a little bit different on the spot price versus the futures price, and of course that's because futures are priced in the future. So the actual breakout point, on this one looks to be right around 28.5, and we're right now on the spot market at 29.460. So about another 900 points before start questioning our demand zone that's below current price on the Bitcoin price chart. All right, moving on up. That was your lowest one. Crude oil down 1.89%. I actually was thinking of selling some puts today on XLE, but I decided not to. I did sell some puts today on silver, so I'll show you guys what that one was as well. You look at this crude oil chart, and you obviously have this pretty significant gap from when OPEC basically said, hey, we're going to cut production, and I've been anticipating this becoming a gap fill at some point, but we just don't need to, or we just haven't seemed to have gotten it yet. So today was a pretty weak sign, obviously down 1.89%, closing at $80.96 as we speak right now. My guess is you'll probably see it come back down towards this 80 mark, and if we can get lower, let's put another red line on here because there is a proverbial line in the sand. I would say if we can get below the low that we saw on April 3rd, then I think we'll start filling that gap. And that low is $79. So you got about another $2 to go before we get to that. I'm not going to call it a demand zone. It's called a line in the sand there. If that does give way, then expect this thing to close that gap and drop all the way down to about 75.60. So not a great day for crude oil. Now gold, giving me an opportunity to buy at lower prices today. We saw that huge move down on Friday's trading activity. Today following through a little bit. We were down much more earlier on and then all of a sudden kind of stabilized. And as you can see by the end of the day, you've got a small real body, long topping tails and bottoming tails. So that really represents a lot of indecision there. So gold on the end of the day was down 0.41%. Earlier was down much more than that. But it's still sitting above $2,000. It's at $2,007 right now. And I don't really recall why I have that line at 1989, 1990. Oh, that's the retest of the breakout, which I thought we might see. And who knows, we might get that one as well. So I was going to sell puts on gold, but the price down wasn't just significant enough for me. So today I actually sold some puts on silver. And I'm curious, I sold those for May 31st, or May 21st. Let me real quickly make sure on the date there. It's a Friday, so that would be May 19th. So I'm just going to put this right here and let you guys be interactive to some extent. Hey, good to see you, Daryl. Good to see you guys be active for a second. If you're looking at this price chart of silver, you can tell, obviously, beautiful uptrend here. We smacked our heads at a high for the past couple of months at 23.89, and then today I fell all the way down to an intraday low of 22.79, closing at right around 23 bucks. So today, when this was just a little bit lower, I was looking out here going, well, where, if I was to sell some puts, where would I like to be a buyer of silver? And again, it's twofold here. Number one, when I'm looking for, in this specific account, I'm looking not only for what price I'd like to buy, but it's important that that rate of return that I'm getting at that price zone is in line with my expectations and what I need out of that trade. So I'm curious, as we look at this price chart here, what you guys think. Again, I sold the May 19th puts today. What strike price would you sell on this one if it was you? Now, of course, you don't have the option chain in front of you and markets closed, so the option chain won't look good anyway. But there are some pretty interesting zones. Let me just move these lines around since you have the, let's call it the 23 mark, which is where it's at, right? That's we could do at the money. You could do somewhere right around 22. And actually right where it's at 20.50 doesn't look too bad. And let's see if there's another one. And we'll put one. Let's just do the $21 even, since that's a common strike price. So Lisa says the 21 maybe, the 21.50 gives you 1%. No, it gives you SLV gaps a lot. Does this affect your trading? Not really. No, and Margaret, here's one of the reasons why I'm picking silver and why I've been trading silver for years now is I don't believe silver will ever go to zero. I'm okay to take delivery of silver, right? If it was a physically delivered commodity, deliver it to me. Fine, I'm cool with that. If I'm trading crude oil, yeah, I didn't think that would go to zero either, but the delivery aspect's what caused that one to go to zero. So for me, I am not worried about it at all. I think silver will never go to zero. It's one of those consumed commodities, right? It's used in all sorts of electronics and other materials, especially with all that's going on with solar. Silver's in solar as well. So my brain's like, long term, I'm fine owning silver. And if I do get exercised at whatever strike price, we'll figure that out here in just a second. I know that I can always sell calls against that and keep lowering my cost basis if I find myself holding shares. If I don't hold the shares and sell the puts and they expire worthless, then even better. So let me real quickly go here. We'll look at expected move and ATR before making a call on SLV. All right, I don't have expected move on there, but we can go look at ATR. Let me, I wonder if it'll let me do this. I have 3 indicators on here already. One of them's Bollinger Band, so let's delete that. Let's add on indicators here and go to ATR. Here's your average true range. And I'm curious, Tom, what would you look for, right? If you're looking at if you're looking at ATR, are you starting with a daily? Because again, I'm going to be in this thing for the next 30 days, right? I have 30 days on this bad boy. Yeah, it's the May 19th is the one that I'm looking at, Big Eb. So that's the vertical blue line here, that May 19th. You know, you look right now, you've got an ATR of right around 44 cents. 44 cents per day. So while that is important, in this type with silver, it's not that critical for me. Some of the other markets, like if I'm looking at energy or if I'm looking at financials, I will pay more attention to that ATR. So the strike that I chose on this one, I'll just read some numbers out here because I know we've got a lot of people listening to podcasts here. But Lisa said 21 maybe, 21.50 gives you 1%. So I was initially looking at that 21.50, which actually gave me more. Gave me 1%. I actually went with the 22s. And the reason I went with the 22s is, if you look at the move up here, there aren't any real clear demand zones. However, you could argue that you had this move up from the 27th of March through the 31st of March, and then it hesitated for two bars and then ripped up. I'm looking at that as a fairly decent imbalance in supply and demand. Now, of course, that's the major driver for all my trades, is what's going on with the buyers and sellers out there. So here is that yellow box is the zone that I'm interested in. And I'll stop it right at the 19th because that's when this trade will end. So I sold it at, I sold the 22s. I did 4,000 or 40 of those puts, so that's 4,000 shares worth, and collected 35 cents worth of premium, which isn't a ton. But again, it's $22 per share. If I got 22 cents, that would be 1%. So in this case, I'm getting about 1.5% for the next month on silver, and I'm buying in this uptrend. The big risk here, of course, is this the end for silver? Does silver all of a sudden crater from here and we see back down to those 1840 lows? And if it does, I don't have enough time. I haven't left so much time on the clock that this thing's going to really get that far away from me, right? I don't expect it's going to be at $18 by the end of May. Certainly anything is possible. But even if it does drift down here, I'm expecting there to be a bounce right around that $22 mark. So that's the level I went with today. Just sharing that one out with you. Exactly, Margaret. $21.99 demand zone. Expected move from May 19th to May 12th, as I'd be okay with getting out a week before, so I'd have to lock it. I've looked at 21. 20 even. Well, unfortunately, Skilled Stocksman, the 20 even didn't give a lot of premium. And in this account, I needed 1%. My minimum to make a trade in these, actually it's two separate accounts, but for those two accounts, I have a 1% minimum. So I was looking at that 2150, which would have given me 1%. Would have been a little safer, right? It's a lot further away from current price. Let's move this line up to 2150. But if you look at the 2150 mark, right, that's the, let me get rid of these lines. That's your 2150 is that red line on your screen, and the 22s is the blue line. The reason I'm not as much of a fan of the 2150 is it's kind of, yeah, it is near a demand zone. It's kind of the upper side of it, but the 22 is right dead center of it. And so I figured I'd get a little bit more premium, taking a little bit more risk, obviously, you know, because being closer to current price. But I'm actually fine to own silver for the long haul. So this is fine with me. As you guys know, I lost my silver on Friday. I sold the 2150 calls against my position, which I was in the money, and I keep selling calls against it to just earn more interest and get a higher rate of return. That was taken away at 2150. So that's fine. I'll look to be buying back in here at $22. Now, what some of you will probably say is, well, Merlin, if you bought lower, right? So I forgot my average price was somewhere around 19. If you bought it, let's say you bought it at 19 and you sold the 2150 calls, which means that I have to get rid of your position at 2150. Well, now you're buying back in, right? So you sold it at 2150. Now you're going to buy back in at 22. That doesn't make much sense. Well, it does, because for weeks and months I have been selling calls against my position, sometimes monthly, sometimes weekly, depending on the premium and the move, to collect even more premium. So even though I got out at 2150 and buying back in at 22 potentially, I've collected a lot more than 50 cents for the premium over the past few months. So there you go. All right, so that was the silver trade that was made today. Let me see real quick. Oliver, I got a question about your input on what do you think about Apple. Okay, sure, 1 second. Well, I won't touch Apple. Apple is on my cannot trade plan, so I don't really look at Apple services, but I'll look at that in a sec. Can't gold make up even the mind if you want to stay above 2,000. Well, and that's the tricky one, is hopefully it will, right? We haven't officially closed below it. You notice right here at that 2,000 mark, we've tiptoed below it, but we haven't closed below it. So I'm pretty sure, Skilled Stocksman, you're long on gold. I was just about to actually sell puts at the money today and do them on for next Friday, but I decided to go with the silver because silver's been so good to me over the past couple of years that I decided to keep going with silver. So there you go. Okay, let's move up. Finally get to the index side of things. So here's your NASDAQ, which was pretty much unchanged on the day. I'm just about to start wrapping a box around this current zone that goes back to the last day of March. we did see a little bit of a downtrend for about 6 days. We shot back up on Thursday, and now all of a sudden it feels like we're losing that volatility and maybe even losing that momentum. So NASDAQ, even though it shows a little bit of a gain here, not the most powerful candle. Right? It was down most of the session, then kind of creep back into positive territory in the last hour and a half of the market. Here's your Dow, similar picture, although you notice that the NASDAQ seems to be trailing sideways, whereas the Dow looks more like silver, just trending to the upside. So we had a bearish Harami formation form on Friday, not really any follow through today, right? For the bearish Harami, we actually had this line drawn at 33,761, saying if you get a close below that, or even a breakdown below it, then you're going to have a short opportunity based off the bearish Harami. Didn't even get it today, so to me, the bearish Harami is off the table, and we'll have to reevaluate that specific setup. But it's making lower highs and higher lows, so it's a little bit of compression here on that Dow futures chart. Let me get this ATR off here. Let's, yep. All right, that was third place. Second place, S&P 500 up 0.31%. Looking great. Another hanging man formation, which we've had a few of these recently. I don't put a lot of emphasis on it. Steve Nissen says that they are a bearish pattern. I actually believe it's a bullish pattern. So I guess he's the one that wrote the book. So you got to go with Steve Nissen on that one. But he says it's bearish. I think it's a bullish formation because of the way it ends the day. Really strong momentum going into the close. My guess is based off this pattern right here, we'll probably see a challenge of that 4,200 mark in the next day or two. Today was up 13 points, so we only have 24 left to get up to that 4,200 mark on the S&P 500, and that would facilitate that nice little breakout. So looking more and more bullish here each day on that S&P 500 as long as it keeps holding this uptrend here. And finally, as I mentioned, I wrote an article talking about how this is the canary in the coal mine and potentially looking at a more downside move in the markets. It's rallied ever since. Oh, the beauty of it. Sometimes I empathize a little bit with Jim Cramer out there, although I am not a clown pushing other people's goods and services. I am just speaking it as a trader. So a little bit different interest here between Jim Cramer and myself on Russell 2000, but it was the big gainer today. Not only did it start positive, it was just pretty much positive all day. Up 1.26% for the Russell 2000. And 1814 is where we're at. You are coming right into some overhead supply just about 1820. So we hit that, got very close to hitting it today. It's at 1814 right now. Have not seen a lot of Steve in a long time. Steve? Who's Steve? Steve. Now you got me thinking. Steve. Okay, so the title and thumbnail for today's show was really Banks Steal the Show. So what I'm going to do is we'll walk through the earnings calendar there and just to see what happened. Now, there's two things I want to cover first. Start with economics because that was an easy one, and then we'll go into the earnings calendar for today, which was interesting in my opinion. So here is your economic calendar. That Empire State Manufacturing Index number, again, the way that is read is if it's a negative number, it means that expansion is collapsing, right? It's not looking good. Things are slowing down with regards to manufacturing. So you saw the expectation there says it's going to go from negative 24 to negative 17, meaning improving slightly, but still negative. Today, that number came out at positive 10.8, which is good. It's not like, hallelujah, amazing, this is the greatest thing ever, but at least it's not a negative number, which means in the manufacturing area of Empire State, New York, you are seeing more positive sentiment coming in there. And now they're starting to feel a little bit optimistic about their local economy, which is a great thing, certainly with all the negativity that's been going on. That is good to see a positive number there for the Empire State Manufacturing Index, especially for anybody here who is bullish on the market. Other than that, not much to speak of. Now, here's the fun part. So Charles Schwab. Okay, Margaret Nissen. I was wondering, where's Steve Nissen? Yeah, I haven't heard much from him at all either. He wrote a few books and then it's done. Just do the trade show circuit, I guess. Charles Schwab, my shares of Schwab, I sold puts expiring last Friday. Those all disappeared. I was so close to selling more puts today, but the numbers had me a little nervous on Charles Schwab. You can see they were expected to make 90 cents per share. They came out at 93 cents per share and had a nice rip up to the tune of about 3.94%. So that was good news for Charles Schwab. Unfortunately, I don't have any Charles Schwab shares right now. Then let's go down lower to M&T Bank, another one, which is a nice surprise. They were expected to make 398, came out at 409. They popped 7.7%. So far, given what we've seen on Friday's action with Wells Fargo and Citibank, and JP Morgan, really good numbers with regards to bank earnings. However, it can't all be roses. So State Street had to ruin the parade today. State Street missed earnings. 162 was their expected, $1.62 expected, and they made $1.52. So they lost money, and they dropped to the tune of about 9%. Now, unfortunately, as I was racing to get up here because I was busy with so much stuff, I have my whole list of notes because I was just digging into all these earnings statements that came out from Charles Schwab and the earnings statement from M&T Bank and State Street. And of course, like my whiskey on Friday, I left it downstairs. So I'm going off the top of my head here, which is going to be a tough one. I can't remember all those numbers and data points that came out. But Schwab, if I remember correctly, their earnings jumped 14%, which was pretty good. They went from $1.4 billion in revenue to 1.6. The one part that was noteworthy there, you guys tell me how much new money, right? So this has been a big topic of discussion. And one of the reasons when I wrote that article, it said, here's the 3 banks that I'm buying right now. It was JP Morgan, Bank of America, and Charles Schwab is the article that I wrote for barchart.com. And I still own my JP Morgan and my Bank of America, although those will be taken away next Friday. So the discussion was, in this crisis of regional banks and smaller banks, it's a crisis of confidence. You have some of the bigger banks going to get bailed out no matter what, but a lot of the regional banks were kind of nervous that they wouldn't get bailed out because they're not too big to fail. They're not a systemic failure, whereas they felt that Silicon Valley Bank was a systemic failure. Same with Signature. Let's bail those guys out. But, are the small little mom and pop banks going to get bailed out? Probably not. So what happened was all of a sudden a lot of earnings or a lot of money was pulled out of those smaller banks, and where's it going to go? It's just logical. I mean, if I'm just an average Joe person and I'm worried that the banks are not going to have my money, I'm going to go to the ones I'm pretty sure are going to be protected, and that's the big banks. Again, JP Morgan, Bank of America, Wells Fargo, Charles Schwab. In that situation, how much money actually flows into those banks is the question. So some of you may know the answer to this, but I'm just curious, how much money do you think flowed into Charles Schwab in the month of March? In the month of March, how much money, new money, came into Charles Schwab? This is pretty interesting, and honestly, I don't know why Charles Schwab isn't up even more than this. It can't just be their bond portfolio that's bringing them down like this. But what do you guys think? How much money flowed into Charles Schwab? I'll give you a hint. It's double digits. Double digits. Naum says he doesn't know. While you guys are typing it in, I'm going to see if I can read some questions. You have not taught the dogs how to No, I haven't taught. Actually, Yo is really good at fetching, but I don't know if he would actually go find. If I could tell him to find a yellow piece of paper on my desk downstairs and which one it was, because I have notepads all over, that would be pretty crazy. I thought we were taking money out. And that's my point, Lisa. People are taking them out of the small banks and moving them to the quote-unquote too big to fail banks. Again, that's why I went with JP Morgan and Bank of America. Those ones cannot fail, right? Bank of America and JP Morgan are so big that if they failed, we would have a systemic problem in the U.S. Therefore, at all costs, they're going to get bailed out. So the award goes to Big Eb. It was $53 billion. So $53 billion worth of new money came into Charles Schwab. That's all assets under management. And why that's so important to me is if you're holding Charles Schwab, they make money off of customers' assets, right? They're either generating interest on your account, lending things out, they're making money off of client deposits. So they now have $53 billion worth of new money that came in. That's huge. That's great for Charles Schwab. Now, I read some of the $40 billion went out, but I don't have proof of that one. It was like a one-time headline I saw, and I actually couldn't find it again. I was going back through articles and right down on my notes. But still, $53 billion is a lot of money. And what I think you're going to see happen, and this is kind of a sad reality of this whole crisis that happened, is I believe that a lot of small banks are going to disappear. Because in order to stay alive, they're going to have to take more chances. They just lost a ton of customers. So how do you get customers back in as a smaller bank? You offer them greater yield. You give them more money. It's just, don't go with Charles Schwab. It's going to give you 0.01% for your savings account. Come to my bank and I'll give you 3%. Well, now that bank has to take on different risks to pay your customers that kind of rate of return. So that's going to be an interesting one. I think over the next 3 to 6 months, you're going to start to see smaller banks just not declare bankruptcy, but just not have enough money to maintain operations and go under, and maybe even be purchased by some other ones, like we saw with Silicon Valley Bank and Signature. Those assets now became someone else's, and that may happen to some of these other ones here. Goldman Sachs loses assets. I think money's pouring into Goldman Sachs. I think Goldman Sachs probably going to be okay in all this one. And Goldman Sachs, by the way, will be reporting tomorrow, so we'll get some really good one there. When they disappear, you mean they are taken over? Correct. Either they shut down altogether, and they wouldn't take customers' money. Your money is going to be secure. What they would do is either send out a notice that they're going to close the bank and give everybody their time to take their money out, or they'll sell to somebody else. But, think about it. If you're JP Morgan, why would you buy a small regional bank? You don't really need to, right? Okay, maybe it gives you an exposure to a specific market segment, but if that bank went under, then why would JP Morgan be able to do any better? So maybe, who knows, maybe it becomes a Chase Bank or something like that. Like we saw with Washington Mutual and WAMU, right? A lot of those assets just merged into other companies. Maybe 505. My memory is correct. Goldman Sachs sent Marcus accounts emails about 3 months. Yeah, it's dropped. I think right now it's 5% for Marcus. Let's see. Yeah, I think it's 5% now. 5.05% for the 10-month if you use Marcus, which is one of the higher rates of return out there. And here, just so I can trust but verify, so you guys know I'm not just making stuff up, there is your Marcus for a 10-month. And it probably was higher about 4 or 5 months, or a few months ago when the rates were higher as well. So now it's just dropped down a little bit. We will see Apple just came out with their savings account, 4.15% for Apple. Not a bad move. I mean, it makes sense for Apple to join in the fray. But yeah, I didn't see that one, Oliver. I will check it out. Problem is for a specific audience, Apple cut right, and that's even though I have an Apple phone, I'm not a fan of Apple. Apple is muscling its way into the financial industry and just started offering up to 4% savings. You know what? What's interesting? Thanks, Dwight. What's really interesting here is, and Tom, you sent me some good articles over the weekend. It's food for thought, especially with the Elon Musk and Twitter thing. Here's what I think is going to happen with Twitter, and I'm right there with you, Tom. Tom says, I expect them to do an IPO in 2025, and I think you're right. I actually think you're totally right. But what he's going to do is, I think that Elon Musk, brilliant man, he's going to take Twitter, make it this news central, now he's news-centric site, right, where you share news and get real-time information about things. Then he's now just offered streaming services. So he wants to basically make Twitter where you would go to host all of your content. So, for example, I may do a dual broadcast and continue the YouTube one, which it doesn't really pay me anything. I do have ads now, so I get like $100 a month or something, which pays for my hosting. But Google takes out a large chunk of the profits. Whereas I think he said for the next 9 months or a year, anybody who does streaming services on Twitter, because it's a brand new thing, they get to keep 100% of all the profit. So there actually would be a nice incentive for people to move to Twitter. So you take Twitter, which is a news agency at this point, a social media site, then you make it a I'm totally just spaced out on here. Then you take it and you make it a media hub, and then he's going to start accepting payments in digital currencies, and I have a feeling he will probably apply for an online bank license, which means you're now going to have Twitter be a financial firm, a media firm, and a social media firm. So interesting development there, and I think it'll really help out with the cryptocurrency space as well, because he'll accept currencies, because he'll be his own bank. He'll make an on-ramp and off-ramp that will be easy for people to access and get currency converted into whatever crypto you want. So, he may be a real big catalyst for this crypto market going forward, but as Tom says, big IPO will probably happen in 2025, maybe 2026, because it'll take him another probably year to get this all done. But boy, I think you guys can see the potential there. That you have this one, does everything standalone entity. Elon Musk could really start charging good rates of return as well. So once he gets his bank up and running, all right, you offer people 4%, and you compete with Apple. But Apple locks you into their ecosystem. Twitter would do that as well, but you could have a Twitter bank account. You could have Twitter. Anyway, it goes on and on. Very, very interesting. I know, KF. I get 70 viewers, only 20. I know that people like this show. They just don't hit that like button. It's fine. It's the share and grow part. I wish there was like a share and grow button. So if you found something you like, you could click on it. It would just automatically mark it, send it out to your followers of your group. Dogecoin will never die. Now, I know. It's just like I'm raising my hands going, Serenity now. I hate Dogecoin. Actually, Dogecoin's fine. It's the Shiba Inu that I really hate. But let's just real quick, since we're on that topic, let's go look at Dogecoin, just because I want to see what that one has done. It's been, that was that initial big spike there. Now all of a sudden starting to rally back up again after a sell-off. So starting to look better. I still don't think I'm going to bring myself to buy Dogecoin, but if Twitter does what I think they're going to do, and that evolution of Twitter, Dogecoin, sadly, could very easily get incorporated in and be the official crypto of Twitter. It would just blow my mind to see that happen, but he already kind of hinted at it with putting the little Dogecoin logo as the Twitter logo. Oh, he's just crazy. All right. So where was I? That was Charles Schwab. So we looked at Charles Schwab. Here's SCHW. I'll look at it. I may actually, if we get a little bit of drift down, I may sell some puts again. I'm not going to go directional on this one just quite yet. And then you had MT Bank. So M&T Bank, that's MTB. M&T Bank beat earnings only by 2.7%, but had a huge pop up today. And I think that part of it was they were showing earnings, but also reflecting in their financial statements that we're okay. We've had our outflows. So, a lot of these banks had money flow out of their bank, but the big damage is done now. How do they weather the storm? And right now you're seeing with the earnings announcements how these banks are doing, right? Because they have to disclose this kind of information. So, all in all, looked pretty good for M&T Bank, but then State Street missed earnings, and that's STT. Look at that one. Obviously, a great intraday trade, but I still wouldn't have touched it based off their earnings miss. You had a huge gap down, and then it rallied pretty much all day, but ultimately finishing the day down about 9.18%. And I'm going to draw this on here just so we can see what the actual damage was at its worst point. So at its low point today, State Street was down 18%. So it halved the losses by the end of the day, still down 9%. So pretty ugly there. Elon said something about becoming the biggest fintech company. He started with PayPal. Fintech is child's play. Yep, exactly. And it's easy for him with the connections he has. I think he could very easily start it. And I'll be honest, now might be the perfect time for Elon Musk to look out at one of these struggling regional banks that already has a charter and go, you know what? I'll buy that bank and then boom, plug that into, or maybe he buys it with Twitter. Of course, there'd be some regular pieces here he'd have to overcome, but I think that would be very, very interesting development here with Twitter. Keep your eyes on Twitter, man. It's a very interesting potential for this. And, when you have a guy like Elon Musk who just seems like, it almost seems like he doesn't have a life. It seems like he's always working on one of his businesses or actually tweeting now. He does a lot more tweeting. If anybody's going to make it happen, it's going to be that guy, Elon Musk. So we have more coming up for the next couple of days. I will go to that here in just a minute, but I wanted to go to, I only had one question that came through. Only one question. And I'll get to that right now. Todd asks, he says, what is the actual definition of a penny stock? I wonder if there's multiple criteria for it, but essentially it's something that trades under $5. So $5 or less is considered a penny stock. I'm sure there might be some other qualifications, but that's just kind of the general. If it's under $5, it's considered a penny stock. And those are securities for me that I generally do not trade. Now, I have traded them in the past, but normally if I'm going to buy something that's under $5, I have to really consider why. Because usually if something's under $5, it's a sign that they're in bad shape and not looking good and getting uglier and uglier and uglier. So let me see if I can find a good example of this. All right, let's look at PRST today. So here's an example of a penny stock. So Presto Automation, right? This thing was consistently going along right around 10. This is probably a SPAC, right? Which is a specialty purpose acquisition. I'm assuming, I don't know this for sure, but it looks like a SPAC because it started off at $10 and just stuck around 10. That's typical for most SPACs. And then for whatever reason, just absolutely cratered and continued to drift down lower and lower and lower. I mean, if you're buying this, it's an absolute gamble. And that's the problem with most penny stocks. Let's see, were there any other hot movers out there today? Let me see. Some more penny stocks. How about CFRX? This chart is about as ugly as it gets. Like, why would you ever want to be buying this? This thing looks like it's on a fast track to zero. And today it jumped up, 150%. Who cares? Who cares? It's done. I wouldn't touch it. So anything under $5, Todd, is generally the definition of a penny stock. But before you buy into anything, whether you're being, on some subscription newsletter, or you decide to sign up for Timothy Sykes penny stock thing, it's just all going to be pump and dumps, right? The vast majority, 99% of all penny stocks are going to be pump and dump, and there's dozens and dozens and dozens of chat rooms or Wall Street Bets, Reddit type rooms you can jump in. They just pump and dump this stuff all the time. That to me is not that's not the way to go and be a consistent trader. It's luck. Lisa, must be no life with 10 kids running around, right? Oh man, crazy. Thoughts on going long on Verizon? All right. Ooh, you know what? I'll do Verizon, but you guys remind me about, was it DirecTV or Dish? I think one of you guys was talking about DirecTV or Dish on Friday's show, and I wanted to get to that one. So, thoughts about Verizon. Okay, first off, I'm an AT&T guy. I used to have Verizon, and I just hated the service. It was just shoddy. So, service-wise, didn't work for me, but that's irrelevant because it depends on your neighborhood and where you're using that phone and location. From a technical perspective, I think that's more what you're interested in here, Alan. Look, it doesn't look good, right? This picture, in the time frame I have here goes all the way back to 2015, but really what's important is what's been happening since 2020. Ever since COVID hit, you would think people would be using more streaming services, more phones, etc. Well, Verizon's just been getting slaughtered. Now, the only saving grace is right now, it's starting to make some higher lows. That's really all I have to say as a positive thing here for Verizon, is it's not making new lows. However, it's still trending down. I mean, you see this wedge kind of that's forming. So I'm not that bullish on this one at all. Kind of would be nervous to buy Verizon. You look at AT&T in comparison. Chart looks a bit better, right? It doesn't have this anywhere near the declines. Let's see. With this Verizon, I'm trying to think of the other companies right now. T-Mobile. I don't know T-Mobile. Oops. Let's go T-Mobile. T-Mobile, much stronger. Actually, looks the strongest of them. Of course, there's Cricket and all kinds of other ones, but this chart just doesn't speak to me. The only time that I would think I'd be interested in buying buying into Verizon, I don't own any, was if we get it closed above $42. And the reason is I needed to start making some new highs. Otherwise, I feel like this trend's going to keep on going down. Is Mint publicly traded, Margaret? No. I'm not seeing Mint Mobile. I didn't think it was. Yeah, I didn't think they were publicly traded. But yeah, that's the Ryan Reynolds company, right? 100% of 1 cent is still broke. Yeah. Well, here's the thing, Mark. If you buy penny stocks, you can go out there and buy something that's trading at a penny, and you can buy 100,000 shares of it. And if it goes to 2 cents, you doubled your money. That's why people play penny stocks. Problem is there's a little bit of greed there. So if you buy a penny stock, let's say it's at a penny, legitimately 1 penny, and it jumps to 2 and then 3, people get greedy and they want to hold on and they're buying more because, it's going to go to $1, right? That's what the newsletter said. And next thing you know, it comes crashing back down. So I don't know. Not worth it. Again, the way I set up the crypto program is when you build your portfolio of cryptos, there's a small portion of that pie that you can put into a gamble category. And that money in that percentage of your account, do whatever the hell you want to do with it, right? You see some sub 1 penny stock, you're like, okay, I want to take a gamble in this one. Look, buy $100 or $1,000 worth of it. Just know that $1,000 got like a 90% chance of disappearing, gone forever. But you might actually hit it big, and that should go in the gamble folder. Again, I've emphasized this many times, to be someone who does this for a long period of time, you can't put all your money in that. You can certainly have a small chunk of your portfolio and gamble on just for fun, but it's all about being consistent. Consistent, and it's impossible to be consistent as a penny stock trader. Verizon is offering a free upgrade phone if I pay them $20 a month for Disney Plus or something like that. So AT&T gave me a free iPhone 14. Ooh, now I'm really cool. They gave a free iPhone 14 iPhone, but it was like I had to trade my old phone in, so I'm still actually paying for the phone, and they lock you in for a 2-year contract that way. But I was like, fine. The important part is I do a lot of my work downstairs. I have a downstairs office that's literally a room inside the house. It doesn't have an exterior wall. So for whatever reason, Verizon, it never worked in there. So anytime I got a call, people are like, hey, you never picked up. I'm like, I never got the call. So I switched to AT&T, and now it works in every room of the house. That's the one thing that's really important to me. KF, what time exactly will Netflix announce its earnings tomorrow? Nobody knows. Do you think it's going to move the NASDAQ more than the S&P? And do you think that the number will be positive or negative? So let me go into that one right now. So here is your earnings calendar for tomorrow. Where is my cursor? There you go. Here's your earnings calendar for tomorrow. And you see, KF, the only thing we know definitively is it before market open or after market close? That's the far right column you see there where it says time. The only two on this list that we're reporting earnings tomorrow after market close, actually three, and a couple really exciting ones, actually. Netflix, which I love using my graphics, so thank you, Tim, for the graphic generation, is the popcorn trade of the day. That will be your Netflix reporting tomorrow. That's going to be after market close. You have Intuitive Surgical, which is, again, one of those very futuristic companies. ISRG, what they do is they sell surgical equipment, and they're now really doing a lot with robotics and doing AI. So at some point in the near future, you may literally have a robot perform your surgery, which is scary on one hand. On the other hand, it's not. It's like, do you trust a doctor who's been working 12-hour shifts or 14-hour shifts for 5 days straight, and maybe he's sleepy and leaves a piece of gauze in your open heart surgery? Or a robot that is programmed to look at everything, but what if it makes a mistake, right? I don't know. I think that when we get to that level of futuristicness, we will have AI robots that perform the full operation, and there will be a doctor or a nurse tech that literally is watching the whole operation, making sure the robot doesn't mess up. But talk about precision moves, I mean, that's pretty impressive. Here's Intuitive Surgical's chart, and I think this most recent round of AI excitement has brought a little bit of life back in Intuitive Surgical, because a lot of people are now realizing that they're using AI a lot in their programs and making their systems more robotic. So it's been a beautiful chart, going from about $225 up to $268 just in the last 4 weeks. Pretty impressive run. So Intuitive Surgical comes after market close, and the last of the aftermarket close, UAL, United Airlines, will be reporting earnings tomorrow as well. The rest of that list, though, banks. You got Bank of America, Johnson & Johnson, Lockheed Martin, Goldman Sachs, the old GS, Government Sachs reporting earnings before market open, Ericsson, and then Bank of New York Mellon. So we have a lot of, I guess, KF, you're wondering what that day is going to look like tomorrow. Here's what it's going to be. I will tell you. Tomorrow, you're going to open up whatever way the market wants to open up. I know, not the answer you're looking for. But look, I don't know how Bank of America is going to report. I don't know how Johnson & Johnson or Lockheed Martin or Goldman Sachs or Ericsson or Bank of New York Mellon are going to open up. And it's really dependent on those earnings. So if we see, as kind of been the theme here, look, Goldman Sachs, huge. Bank of America, huge. Bank of New York Mellon, huge banks. These are not the small cap little guys. Actually, I would take that back. Bank of New York Mellon is kind of a smaller one. They're only $36 billion market cap. But you have Bank of America's $228 billion. Goldman Sachs is $110 billion. So those guys are huge. If they report great earnings, as seems like the big banks are doing, then we'll probably see the market start off on a nice positive footnote. But that's a pretty bold assumption. There's a lot of other factors that can move that market tomorrow morning. If you look at at least somebody else already has the numbers. That's the sad truth. People always told me you got to watch out for earnings statements because earnings come out. No, earnings come out to you and me. Earnings have already been out. I mean, if you're working at Bank of America, do you think that the CFO doesn't quite have the numbers ready until that announcement? No way. This thing's been thrown around the whole organization. Everyone's had a chance to look at it, make sure that these departments and numbers are right, and we all good. Yeah, the numbers are already out there. What I do know is the Netflix reporting after hours is going to have a huge impact on the NASDAQ. It still is one of your FANG stocks, even though I don't believe it should be, but NFLX has been on a gorgeous move from those lows back here at 164. Now, again, I always love putting this one up here because Jim Cramer said to buy this thing when it was $597, and it fell all the way down to $162. Way to go, Jimbo! You the man. Well, it's been on a absolutely fantastic uptrend, right? It's doubled its price in the past year, which is great. The question is, how are they going to look going forward? And it's going to come down to subscribers. It's going to come down to revenue per customer. Are they their ad service? Are they making money off that? So I don't know how that's going to report, but I can tell you that it's going to be the popcorn trade of the day, which means it's extremely volatile. Just watch out for those price swings. I personally would recommend don't trade it at all. When you have ones like Netflix or Facebook or Apple that have these huge 10% swings in a matter of seconds, you might have some opportunity to put some limit orders very far away from price. And that may be a potential trade there, but again, that's very, very risky. If I go out here and look at your next like really significant areas, well, obviously there's that 370 mark. Personally, I think if it reports any earnings tomorrow, it's going to go somewhere between these two lines, somewhere between 286 and 270. I think that'll probably be its range for tomorrow. On the earnings announcement, it'll be really wild. There is obviously these levels that are way out here, like closing this gap that goes all the way back to the 20th of January of last year. That's at 513. I really don't think that we're going to get there tomorrow. But you know what? Hey, put an order to sell short at 513. Why not? I mean, that's a huge gamble play, but I won't be doing that. So anyway, I don't know which way it's going to go, KF. I can tell you there will be a lot of volatility. It is the kickoff to the most volatile week yet, right? Last week was good. This week we've got Netflix tomorrow. You've got Tesla the day after, and then the week after that, that's when you got the big juggernauts reporting earnings, but we'll talk about that next week. The Netflix password crackdown will have created some chum, good or bad. Yeah, and you know what, rightfully so. I mean, I knew people that were sharing their Netflix password, like 30 people. Now I think you get 4 or 5 people per password, 3 or 4. That's fine, that's great. So that's your earnings calendar. Let's check your economic calendar because there is some announcement tomorrow as well. Really, for the U.S., it's about housing. You have building permits and housing starts coming out tomorrow. The only reason I'm really interested in this is I want to see, as we go into summertime, you really want to see these numbers start to surge because people that are going to be making changes to their homes, building permits, you would expect that to happen during the summertime, and that's a good sign of economic growth and prosperity is when you have surging permits and housing starts, right? New homes being built. That's a good sign of economic recovery. If those numbers come in rather muted, that's not really a good sign. And remember, we've had rising rates for quite some time, and that may put a damper on those housing starts because of the impacts that the loans or the mortgage rates have had on our market going forward. So that'd be a really interesting one. Talking Monkey says, watch lumber. Well, lumber's been on a really big rip here recently, but overall, check this chart out. Here's Random Length lumber. I mean, really just an incredible chart. I was, as most of you were, just blown away when lumber hit $1,700, and here we are now at $427. But it's had a huge rally over the past 2 weeks in lumber, but still way off its all-time highs. So, this is certainly something that would have an impact on those housing starts and building permits, right? Like that house next door, they better lock in that lumber soon. They've been do all kinds of building. Other than that, you have some European Union news. You can see at the top in the wee hours of the morning. You have the trade balance and the ZEW economic sentiment numbers, and that is pretty much it for mañana. All right, that's it. I'm going to wrap it up. What do we got? How much time do I have? All right, 49 minutes. I'm doing my best to try to make this a 30-minute show, but I think in the 4 years that we've been doing this, I think I have yet to actually have a 30-minute on the dot show. I think I had like a 36-minute show. Might have been the shortest one we've done. David says, I wanted to trade lumber last year, but there isn't enough liquidity to bother. Correct. Not only is there not enough liquidity, but with some of these ones, I don't know specifically on lumber, but they have really odd trading times. They don't trade the same as other instruments. So before you start jumping on those exotic ones, make sure you check, go to the CME Group site or ISIS site, whoever is running that contract, and make sure that you know the specifications for it, Dave, because it looked exciting, but hard to do. All right, that's going to do it for me for today, everybody. If you guys have questions, comments, feedback, you can send them to me at TraderMerlin@gmail.com, which is on your screen, or you can just put your comment down below any of the YouTube videos. I'm always happy to answer those ones, and the more questions, the merrier. Right now, I don't have any guests, nor do I have time to go find guests and ask people to come on the show, so it'll be just me for a little while. An hour is perfect. Yeah, Tom Messina. I'm sure an hour is perfect, but the cost benefit for me isn't quite there yet. Anyway, thank you guys so much. Hit that like button. If you don't like it, that's cool as well. Just let me know why by emailing me at TraderMerlin@gmail.com. Take care, everyone, and we'll see you all for our Tuesday show and an earnings smackdown with Goldman Sachs and Netflix leading the way. Take care.